I will introduce myself. I am Mony, chartered accountant from Calicut, associating with SIRC for all the programs. And my good friend Soundararajan and Ramesh is also there. They were faculties of yesterday. Happy that our vice chairperson also has joined this. And we are ready to answer. Revati madam is also there. I am there. Ramesh is there. Soundararajan is there. Anybody wants to clarify anything on bank audit? You can just share your questions so that we will answer that to the expected wisdom which we have got. And wherever we need some other clarification, we will go to the Reserve Bank guidelines, etc. So you can just go ahead with the questions.
Yeah, yesterday there was a special request from the Sundararajan sir, yesterday's speaker, that he want you to throw light on critical issues in LFAR, sir.
That is right, but for 7 people, if I am going to throw the light will be more.
Blinding light, sir.
It will be over like because we had already had sessions in so many places, myself, Soundararajan and all. Actually, we had sessions. I think Soundararajan sir also had Ramesh. All of us had sessions, more than 15 sessions this year also. So everywhere and for LFAR, I think anybody can refer that LFAR comprehensive LFAR note. What to do with the LFAR? New LFAR is given in the journal, CA journal in the year 2022, which is my article only. They can refer to that April article. So you can refer to that article. And in respect of restructured advance also, I had written an article which has also been published by the global journal of our chartered accountant. So you can anybody who wants to have any reference about LFAR and the new practical concepts of the LFAR, you can just visit that particular journal and get know of that.
Members, you can ask your query either by unmuting or typing your queries in the chat box, please.
Yeah. Yes, my dear members, is there any questions to be answered by me? Please tell your questions. We will discuss about and deliberate on that.
Mony sir, do you have any specific topic that needs to be covered that a member should be aware during this bank audit?
That is what I told you. No, we had long sessions in the bank audit seminars.
Okay.
We had conducted everywhere, so it may take around 3 hours for you to cover one subject. So LFAR itself is one particular subject which will take around, as you mentioned, Sundararajan are advances, verification of advances, classification of advances, prudential norms, all these the practical tips of bank auditor. Then your audit under computerized environment. These are all the topics which we were handling in various branches. So if you want to go through that, it may take a lot of time. Only thing is that 2-3 things which I would like to tell is regarding the query which has come from one of the auditors of Union Bank of India, where the interest application has been made wrongly for 366 days instead of 365 days, something like that. So there is an excess interest which is charged by them. So this being leap year, actually there should be 366 days. But I think by the calculation they have done, the entire product number of days comes to more than 366 days. So that is one of the queries which I have received, which have got a global impact for the bank as a whole. And when I discussed with him, he said that the regional office and the head office, central office is also aware about that. So that is one thing. Second is regarding the practical difficulty of verification of the documents which are lying in the central hub. That means your regional hubs are being formed by various banks to process the loan documents and the loan papers. In Union Bank of India, we have got the loan hub. In State Bank of India, we have got the RSCPC, RFCPC, like that. So there are a lot of loan hubs or the verticals which has been organized by the banks, and that too they handle the entire documentation, sanction, appraisal, and the disbursement of the loans. But the loan documents are lying at the hub offices, whereas the loan is in the books of the branch. So supposing I am taking a car loan, the car loan will be appearing in the books of the branch as car loan. But the entire documents and the papers including the sanction purpose, will be lying with the hub.
1 minute. Rahman, please mute everyone, Rahman.
Yeah. Technical team, please mute everyone except the speaker. Technical team, please mute everyone except the speaker.
Sure.
Yeah, please.
So, the difficulty of getting the documents have to be immediately reported to the regional office, or it should be escalated, because the branch auditor is signing the balance sheet of the branch. So he is responsible for the figures of the branch balance sheet. If at all you are not able to verify the documents physically, whether it is lying in the branch or in RSCPC or any of the verticals, you will have to take a note of that and you will have to report to the central auditors. It is the implied duty of the banks to produce the documents before you, or they should at least allow you to go to the center where the documents are maintained and verify that. Or if it is a large advance, it may not be coming under the verticals. If it is a large advance where the consortium leader is holding the documents, there will be a legal audit which would have been conducted by the bank, that is the leader. So the legal audit report as well as the currency of the documents have to be ensured from the leader of the consortium. So that is what is the practical difficulty in respect of verification of documents which is encountered by the auditors at the branch level, wherever we go to the small branch. Now another practical problem is whether we should verify cash or not. So cash verification is not intended. If it is an ATM attached to the branch, we call it as online ATM. If it is an online ATM, the cash scroll as on the date of closing has to be taken by the auditor. Actually, it would have been taken by the branch itself, and that should be verified with the ledger balance. So there are offline ATMs where it will not be appearing, or the cash balance in the offline ATMs will not be appearing in the general ledger of the branch. So wherever there is an on-site ATM, that is ATMs attached to the branch, the ATM cash balance will also be appearing as a cash balance in the books of the branch. So in those cases, you have to take the scroll. Now RTGS and the NEFT suspense. So there may be some technical issues, mainly because our 29, 28, 31st, there were a lot of holidays. There is a practical problem which would have been encountered with respect to the transfer of funds. So RTGS and NEFT transfer would have been either delayed or it would not have been processed by the RTGS hub, except for government transactions. 31st was also a holiday. So commercial transactions otherwise than government transactions, there would have been some hiccup. And the RTGS which has already been sent from there, as of 31st March will be lying as rejected, or it would not have come to the main realm of hitting the account for which it is intended for. In such cases, the returned RTGS will be lying in the RTGS suspense account or any other account, intermediate account or the parking account. So if you find any figures in that parking account, you have to be very careful in respect of that. That is another point. Next point is the non-fund based advances of the potential NPA accounts. Supposing that you find a potential NPA account, and the potential NPA account means an account which is showing all the incipient weaknesses as on 31st March 2024, but it is not technically an NPA because of some reasons or the other, but it is a potential NPA. There are all inherent weaknesses attached to the advance account. In those cases, what you have to do is that you will have to also analyze the non-fund based exposure of that particular account. If there is an LC, or if there is a bank guarantee, or if there is anything which is going to be maturing in the near future and the account is not operated properly, so there is a potential risk for the bank in respect of the fund-based advances as well as the non-fund-based advances. So those cases where you have identified yourself as a potential NPA, you have to also look into the non-fund-based advances. That is another practical point which we have to be very carefully looking at. Next practical point is the attestation of your system-generated NPA statement. In the case of attestation of the system-generated NPA statement, bankers are always taking it very lightly and putting it before the auditors that you have to just sign because everything is generated from the system. But what we have to understand is that the integrity of the figures which are being fed into the master as well as the balances of the advances, balances of securities, written down value in the case of the depreciable assets, the legal formalities and other hurdles which has been formed in respect of your livestock advances or in respect of your project under implementation. All these things are very important. So in respect of those accounts and in respect of the valuation of the security, where it is a doubtful asset, it has got an impact and bearing on your provisioning. So you also verify whether the system generated NPA statement is drawn out from the data which is accurately in order in all respects. Supposing that your stock statement is not submitted for 6 months, and if the drawing power as per the system is taken for the purpose of the system generated NPA statement, it may not be considered because your drawing power has to be made 0 in the system. So any stock statement which is older for more than 3 months cannot be taken in all practical parlance. So in those cases, your drawing power will become 0 and the secured portion will be calculated accordingly. So the integrity of the figures which is being fed into the master as well as the computer for the purpose of generating the system generated NPA statements is to be verified by the auditor. Another point in the case of the system generated NPA statement is the date of NPA. So Bank of India, Diamond again has told that the date of NPA is the running date of NPA which qualifies or which the account is to be considered on a day end basis. Whenever the day end operations are being done through the system in the bank, the system should be attuned to classify the NPAs as on that particular date. So it is not necessarily that the NPA should be following a particular pattern of dates like year end, month end, quarter end, or fortnight end, etc. So the concurrency or your continuation or your NPA identification is a continuous process. So whenever day end process is happening, simultaneously the system should be attuned to identify the NPAs also. So when the identification of the NPA is not happening on a concurrent basis at the every day end, then it is a matter of concern for the auditor. So from the system generated NPA statement, he has to verify whether the dates which are given as the NPA date, at least in respect of those large accounts which are been identified as NPA, we have to see the date of NPA, whether it is accurately punched into the system or not. Now coming to the written down value.
Sir, may I just interrupt with a
Please,
question
please.
on this?
Please.
You're talking about this NPA statement and the day end activity. Normally, nowadays, the day end is done in the regional office or the head office, central office. It's all centralized. Okay, but no exception report is actually thrown out regarding this NPA movement on a daily basis.
Yeah, that
So how is that actually going to be tracked by the auditors when we are doing the work?
Sir, madam, I would like to just correct you. Day end operation is not centralized, it is branch wise. So every branch has to do the day end operations and it should be centralized through the CBS. So your day end, there are certain protocols to be followed in respect of the day end operations to be performed at the branch level. And at the branch level, when your branch has no problem with respect to the inter-branch accounts, with respect to the transfer scroll, with respect to the RTGS suspense, with respect to the NEFT suspense, all these things are centralized. So the database, if there is any mismatch between your branch code, then your branch will not be permitted to do the day-end operation by the CBS. So you will have to correct that and then only you will go to the day-end operation. So the day-end operation is actually being done at the branch level. And what the Reserve Bank of India says is that the CBS platform by itself should be attuned to generate and identify the NPA on a concurrent basis at the end of every day when the day end operations are being carried out. So when the day end operations are carried out at the branch level or at the central office level, when the closure of the accounts after the day end process is happening, immediately you will have to identify whether there is any CC account which is out of order for more than 90 days, whether there is any account which is so. It should be a simultaneous process. So the simultaneous process, which means that the NPA date will be not an even date. It may be an odd date where it will be taken on the basis of the end process. So if you find that in the system generated statement, all the NPA dates are following a particular pattern, we have seen that the system generated NPA statement will say that all the accounts have become NPA on 1st of a particular month, or the 31st of a particular month, or 30th of a particular month, or 15th of a particular month. Which means that if they are following a pattern of dates, then you can very well be assured that there is a problem in identification of the NPA on a day-to-day basis. So there should be, it should not be following any pattern of dates, and it should be erratic. Now the next question is regarding the borrower-wise classification. So in the NPA statement also, there should be borrower-wise classification given in the NPA statement. Supposing that a borrower has got 4 accounts, 4 loan accounts, or 5 loan accounts, the system is going to capture the particular borrower's accounts lying in any part of the particular branch as term loan account or car loan or housing loan or CC account or your gold loan, whatsoever it is. It will be connecting these particular accounts together. If you look at through the logic of the system, there should be some single parameter which should be walking through the entire database so that you will be able to identify and sort out the number of borrower accounts which is coming under a particular borrower's ID. That means a identification number. So the customer ID is very important. So the customer ID is the prime criteria for understanding or for grouping the entire loan accounts of a particular borrower under a category. So your logic and your accuracy in assigning the customer ID is very important. Supposing that you have got a borrower who has got a gold loan or who have got a loan against deposit. So in the case of a loan against deposit, as per the borrower-wise classification, the loan against deposit also has to come under the NPA classification. Then you will have to give a separate parameter for loan against deposit, where it should be taken only when the margin is not covered. So that will be taken out because the loan against deposit is given a separate treatment by the Reserve Bank of India guideline. But as per the customer ID norms, it should also come as an advance given to the particular loan. So what I am trying to tell you is that the paradigm importance to compositely cover comprehensively come into the entire details of the loan taken by a particular borrower. The customer ID is the running parameter which will be used for the purpose of selection. So if the customer ID is not uniformly allotted, or if the customer ID is not given, if you take the loan account number itself, you can decipher the loan account numbers of every branch, every bank, or every account. If you decipher, you can see that the code will be first 2 digits will be representing the region, second 2 digits will be representing the branch, third 2 digits will be representing the classification of the loan, the housing loan or something like that. And next only, last only you will have the account numbers. So in between 3, 4, 5, 0, 4 zeros will be added. That are all fields representing something else. So what is required is that if the customer ID is not properly being aligned into this particular loan account, the grouping process will be wrong. So we have to be going to the analyze whether the assignment of customer ID to a particular borrower is proper, whether he is having an SB account, whether he is having an FD account, whether he is having a car loan account or housing loan account, the customer ID should be the same. Otherwise, the system generated NPA statement will not be covering comprehensively the entire loan portfolio of the borrower. That is another point which we have to be careful.
Sir,
So
can I interrupt just once more? So you were talking about gold loans. If you see yesterday in the Economic Times, there was an ad which was given by a bank saying that around 100 gold loan accounts, the jewelry are going to be sold by e-auction. And they've given all the details and they've said you can access through this portal site and all that stuff. Now, what will that I was just thinking about it when the audit is going on, this particular ad has come. What will such a situation, what kind of an impact it will have on our work?
Our work basically for gold loan, what we have to understand is that there is no separate treatment for gold loan. Gold loan has to be treated as if it is any other loan. So that is what is the RBI circular says. Except in the case of your loan against deposits, Kisan Vikas Patra, Indra Vikas Patra, you will have to have only one yardstick of considering the gold loans also at par with the other loans. So that is a prime important aspect you have done. Then when it comes to the gold loans, you have got agricultural gold loans as well as non-agricultural. So the classification of a gold loan as agricultural loan, gold loan has got a lot of strictures. So whether that strictures are being followed by the bank is the second question. Third question is that the gold loan, if it is becoming overdue and if it is becoming NPA, whether the provisioning as well as the other aspects in respect of that is being followed or not. Supposing that I have got a security of 50 grams of gold and the gold is not taken for 2 years or 3 years, it becomes a doubtful asset eventually. But the portion of the security cover is that considering the present value of the gold or the margin whatever is adopted by the branch, the value is fully secured. But it is an NPA. So you have to provide the 40%, 60% or 100% on the unsecured portion. So, secured portion. So, if it is DA1, you have to provide 40% of that. DA2 means 60%, and if DA3, 100%. If at all it is gold loan covered by full security, back-to-back security, you have to go by the provisioning loans. Now, coming to the auction part, there are two things which has been told by the Reserve Bank, which says that if an account is, it comes because since the auction is going to take place after March 31st, we are going to do the balance sheet audit as on 31st of March. So now the question comes, very practical question comes, what will happen, especially in this year 2023-24. The practical problem is that there were around 4 holidays at the end of the year. So bankers would have pushed all the potential NPA accounts to recover the dues from them. And at the end of the day, if the recovery is not coming, the bank holiday would have also been actually hitting the recovery process of the bank. Usually, you all know that only on the 31st last day, all these remittances and the recovery will come. So practically, they would have failed in getting the recovery on the 28th or 27th before the last working day. So it would have come on 1st April or 2nd April as the case may be, which means that it is the post balance sheet date. So what is to be done with the post balance sheet date recovery is a very pertinent question in every bank audit. So Reserve Bank of India says that as on 31st March, if the particular account is to be classified as an NPA, strictly you have to classify it as an NPA. Now what happens if the account is fully recovered? Or supposing that I had 5 overdues as of 31st March. So since it is more than 3 overdues or 90 days, I am classifying it as NPA. On 4th of April, the customer is going to pay all the 5 overdues. That is case number 1. When he is going to pay all the 5 overdues, whether I will be able to consider for the purpose of reclassifying the account as a performing asset as of 31st March? The answer is no. Second is that I am paying 3 quarters, which means that out of 5 quarters overdue, I am paying 3 quarters, which means that I am bringing it below 90 days. So I am not an NPA as on this particular date. Only two installment outstanding. So I am not an NPA. Even that cannot be considered. But one consideration what the Reserve Bank of India has given is that you have to consider those cases where the loan account is completely closed. If it is completely closed post balance sheet date before your closure of the audit, supposing that on 4th of April, the entire loan is closed. In the case of auction, what will happen is that the loan will be entirely closed. So those auction proceeds can be taken. You can take a call. The auditor is given the liberty to take a call in respect of the post balance sheet recovery and those accounts which are fully closed. That is the branch auditor's call. Second is post balance sheet recovery in respect of other loans. There are other loans which would have been huge amount of remittance would have come on 1st April, 2nd April, or even 15th April. The branch auditor's hands are tied up. He cannot consider that as a post balance sheet recovery. Even our accounting standard, even occurring after the balance sheet date, will not work there because your Reserve Bank of India prudential norms supersedes the accounting standards in respect of recognition of NPS. So, in those particular cases, we have to only report it to the central statutory auditors who may take a call for the bank as a whole to ensure uniformity as to what is the cutoff date in which we will be able to consider the recovery for the purpose of that. So, as far as the branch auditor is concerned, for your question, if the gold loans are actioned and the entire loan is closed, you can take a call whether the account is to be reversed from the NPA or not, or whether you should pass the MOC. In my opinion, you can only push it to the central statutory auditors, saying that it is already closed and the MOC is not passed at the branch level, and the wisdom of the central statutory auditors may prevail to ensure that there is uniformity across the entire bank. Supposing if the bank has got 3,000 branches, there should be uniformity of classification of NPA for post balance sheet recovery across the bank as a whole. So you can push it to the central statutory auditors with a remark in your audit report and the LFIR, and you can also send a separate mail to the central statutory auditors stating all these facts, and they will take a call on that as to what is the cutoff date on which the post balance sheet recovery is to be considered.
Thank you.
So anything else?
Members, any queries to Mony, sir?
Sir, regarding the gold loan, sir, many of the rural branches, all the loans are classified as agri loans.
Agri loans, okay.
And we have seen the loan application, nothing is mentioned about the land or land holdings and the purpose for which it is taken. Not even it is mentioned as agri.
Okay.
Only gold quantity is mentioned and the signatures are available.
Okay.
In one case, even the bank staff has been, the gold loan given to a bank staff is classified as agri development loan. So as auditors, interest subvention, they are claiming where land particulars are there, those documentation is available, they are claiming interest subvention. Otherwise, they're not claiming. But classification in the balance sheet remains as agricultural loan.
Okay. So now, it's a very important and practical question as far as the rural branch is concerned. So in the respect of the gold loans, there are certain strictures which is passed by the Reserve Bank of India to classify it as agricultural gold loan. So if you want to classify it as agricultural gold loan, all the relevant purpose to prove the purpose of the loan is to be there. In fact, the Reserve Bank of India also says that the bank has to issue them a Kisan credit card, KCC. Any gold loan which is classified as an agricultural gold loan, the borrower should be given with a Kisan credit card. It's a must. In nationalized banks, they do it meticulously. So the first parameter you have to see is, as you rightly said, whether the documents are proper in respect of ensuring that this is used for the purpose of agriculture or the end use of the loan is agriculture or not. Point number one. If the end use is not satisfied, the loan delivery system, there is a circular given by the Reserve Bank of India with respect to the loan delivery system. There, where the end use of the loan has to be satisfied by the bankers. And in fact, in 2020, 21, 18, 19, and all, so many banks have got fined from the Reserve Bank of India for classifying the non-agricultural gold loans as agricultural gold loans. So in your case, the classification of agricultural and non-agricultural gold loans, you can take the entire loans where you are not satisfied with the credentials of the documents with respect to prove that this is an agricultural gold loan and reclassify it in the asset class. There are 4 types of statements which we are signing. One is sector-wise classification. Other is NPA classification. 3 is segment-wise classification. So 4 statements, and another is NPA statement. So 4 statements we are signing in respect of your advances. So one is a sector-wise. Sector-wise is whether it is priority sector or whether it is non-priority sector or whether it is agriculture or whether it is a industrial sector. So priority, non-priority, and your MSME. So many classifications are there in the sector-wise classification. So all these loans you can give an MOC for reclassification as non-priority. Point number 1. So wherever you are not satisfied with the credentials of the documents to prove that it is used, the end use is agriculture, you can give a qualification stating that MOC can be passed in respect of the sector-wise classification from primary sector to non-priority sector to non-priority sector. That is point number 1. Point number 2 is regarding the interest subvention. Interest subvention, invariably, we will also have to see whether there is any certificate given by any other chartered account. including the concurrent auditor in respect of the interest suspension or not. If any other chartered accountant has given a certificate in respect of the interest suspension, including this loan, then it is going to be a very big problem for the chartered accountant also, because you are going to contradict to the certificate which has been given by your own the faculty. That you have to do, don't have to see. You can caution that chartered accountant about that, and you can do your part of the job as a statutory auditor. And if the agricultural gold loans subvention is not collected, or if subvention is not claimed from the government, then that part is safe with respect to the classification. But what you have to see is that even as per the bank norms, there are two type of interest which is applicable. One is for priority sector and another is for non-priority. If the agricultural gold loans are given at a lower rate of interest by the bank itself, leave alone the interest subvention, which is a direct loss to the bank. So agricultural loan is going to be given, priority sector loans are going to be given at 6% or 7%, whereas your ordinary gold loan will be given at 9%. So whatever is the policy of the bank, the differential rate of interest between the normal gold loan and the agricultural gold loan has to be quantified. And you have to pass an MOC, or you can say that the profit and loss account is understated to the extent of application of interest of misclassification of the agricultural gold loan and non-agricultural gold loan as agricultural. So this particular interest rate is available. You can take the total interest rate. If you are able to make an Excel sheet of that, well and good. Otherwise, you can say that the agricultural gold loan is not properly documented to prove that the end use is of agriculture. So I am of the firm opinion that so long as the end use is not proved, it cannot be classified as agriculture. And there is no documents underlying to prove that this is for agriculture. So the sector-wise classification of priority sector and non-priority sector is already given in the MOC. And in respect of the interest loss to the bank, the interest differential between the priority sector and the non-priority sector for this particular bank, X bank or Y bank, is X amount of rupees. To that extent, your profit is understated from this particular branch. So these four things you can give. And if the branches permit to pass an MOC to increase the interest, they have to recover it also. That is another point. If at all they are asking asking you to pass an MOC, they have to recover the low interest from the individual gold loan accounts also. That is also very important. So that is, I think there will be some resistance from the bankers. You can qualify that and you can give it in the LFR also, that the underlying documents to prove the credentials of the agricultural and classification of the gold loans as priority sector is not satisfactory. So I have given my comments in respect of the classification, and MOC is passed for reclassifying the priority sector loans to non-priority sector. In respect of the interest differential, the amount is X, and this is left to the bank to take a decision at the central level. Because for the branch auditor, the biggest leeway is that he can push anything to the central auditor. Because central auditor is the final person who is going to sign the bank balance sheet as a whole. So our duty is to assist the central auditor with respect to the legal perspective of the statutory aspects of that particular branch only. So you can push this particular matter to the central statutory auditor and let him take a call on that for the bank as a whole. Because this particular lacunae or discrepancy, what you have shown, what you have told, is a very practical thing which is available in all the banks, in all the branches. So in rural branches, if it is there, we have to, as a statutory auditor, it is our implied duty to awaken the actual facts before the authorities, and you can very well reclassify it in the sector-wise classification. Also, you can pass an MOC for the differential rate of interest, or you can give this in the LFR as well as the main audit report in respect of understatement of profit or revenue leakage.
Thank you, sir.
Yeah. Thank you, Kamlesh sir. Any other query from any of the members? Somarajan Nair sir, you said you have a doubt. Somarajan Nair sir. Any queries, member? You can also raise your query in the chat box. Mony sir, no queries it seems.
Yes, madam. Revati, madam. What should we do? We will wait for the queries.
Yes, we'll just wait for a few minutes. We had around 14 participants. Some of them have left.
Yeah.
So,
See, our people will have queries, but it is difficult for them to ask in a public forum. That is a
public
bit
forum. Yes, exactly.
I have seen when I go for seminars and all, everybody will be so receptive, hearing everything. Only when we come out of the podium, so many people ask 100
Really.
questions.
Yes.
When it comes to the crowd, they will be reserving all their questions for themselves. So if they had asked the questions in the open forum, at least somebody else would have
Everyone will.
understood for that. Anyway, people of wisdom will never speak.
All chartered accountants are very wise, sir.
That is why I told people of wisdom will never speak.
No, that is why.
Eh,
So members, any further queries, please feel free to ask, sir, because we have him here sharing his knowledge and experience with us. So, sir, this gold loan thing which we were discussing right now, will it have any impact on the ICOFR report?
You mean IFC?
Yeah, the internal financial
In this
control.
IFC report, in fact, if the other point what you have cited, no, your non-classification of priority sector, non-priority sector, actually it is not a control weakness, it's only a procedural weakness.
Okay.
So IFC more deals with the control weakness. So control weakness again, we have to classify that as physical control, logical control, systemic control, then protocols violation, procedural violation. So procedural violation leading to any control weakness. So this is actually not a procedural, control weakness or procedural violation leading to control weakness. So it is a class, what you call calculated weakness or calculated mistake which is committed by the branch in respect of all the gold loans which has been sanctioned by them. So they are evasive about the regulations and the procedures. So it may not be directly finding a place in the IFC because IFC directly deals with the internal controls. So whether there is any incipient control issue with respect to that, it is only procedural lackness or discrepancy.
Okay. And we don't need to give a modified report also for this because it's only a procedural lapse.
Yeah, this has got impact in respect of your sector-wise classification, priority, non-priority. Then you have got impact in respect of your interest differential, whatever is the interest charged versus whatever is the interest to be charged. So bankers will be happy to charge more interest because they are going to get more interest.
Yes.
But the branches may not permit you because they may resist you because it's their procedural violation will come to light.
Yes.
So you will have to take a call of that and you will have to report it to the central auditors that this is the exact position. And anyway, sector-wise reclassification you have to take. And in respect of physical verification of gold, Reserve Bank of India does not say that you, statutory auditors should verify the gold physically. You don't have to do the physical verification of gold. That is for the information of the members. If you have time, you can do that. But it is not required that you should do a physical verification. And second is that the purity of the gold. The purity of the gold and the quality of the gold is not your domain because it is the expert's job of the goldsmith or the appraiser. Now coming to the IFC and the gold loan. The major point is the appraiser. When you are going to rely on the work performed by the others, major parameters which you have to see in respect of relying on the work performed by the other is the competency of the person who is being performed and the level of data which is furnished to him. And three is that how far he is able to do his duty diligently. Four is that whether there is any risk in respect of accepting his certificate or accepting his opinion for the purpose of your audit. These are all the four main things. So there, in a particular branch in Kerala, what we have identified is that an appraiser is there in the branch, attached to the branch for more than around 18 to 20 years. The appraiser is actually the son of a father who was the appraiser of it. So they belong to the goldsmith community. And fortunately or unfortunately, we don't have a benchmark for deciding the qualification of the appraiser. Banking system so far does not have a benchmark for deciding the qualification of the appraiser. Earlier, when the Gold Control Act was there was a licensing system of the goldsmith. Now the Gold Control Act itself is dispensed with which there is no licensing system. So what happens is that it is being empaneled as per the norms which is prescribed by the bank. They will get a declaration, etc., and they will appoint him as the appraiser. And there are no goldsmith also. Youngsters are not coming to this particular profession at all. And you have got purity analyzer is there. There is a mechanical device which is available, which is called the purity analyzer. So the bank's IFC, we can have two things to be added. One is the internal control weakness in respect of reliance on the work performed by others. That is a competency of the appraiser, the job rotation of the appraiser, the longevity of association of this particular appraiser to the branch, and again, whether the appraiser himself is personally involved in certification of the, sometimes the appraiser himself is entrusted with the task of even dispersing the loan. Those are actually control weaknesses. So if you observe, majority of the places, appraiser will even prepare the loan documents. He should not prepare the loan documents. He is supposed to only give the certificate in respect of the valuation. That is your LTV, loan to value. Okay. What is the value determined by the bank in respect of per gram? What is the amount to be paid vis-a-vis the market rate? That is again decided by the central office of the bank. And what is the purity of the gold? And what is the stone content? And what is the net amount which can be loanable funds out of the gold which is pledged? That is security value. According to the purity of the gold only can be certified by it. So if you find that the appraiser himself or the appointment of the appraiser himself is lucid, or the control in respect of the expert appointment is not properly designed in the bank, that is a matter of internal control weakness. Two is that the long association of the appraiser in the branch itself is an internal control weakness. Job rotation is not there. Three is that the appraiser himself involving into various other activities and the appraising is the third point. Four is that appraiser even getting into the vault is not permitted. There are a lot of places where the appraiser is given the key of the vault. So he goes to the vault, he takes the packets and he delivers it to the, because the gold loan portfolio is totally handled by him. Those are all things which are to be very much commended in the IFC. Because in gold loans, what we have seen is that the 80% of the gold loans or the fraud in respect to the gold loans are perpetuated through the appraiser or with the connivance of the appraiser. So the appraiser's movements, appraiser's appointment, appraiser's job rotation, appraiser's competency, appraiser's vigor in conducting the job as an appraiser itself is a matter of concern for the auditor. You have to observe that, and if there is any weakness, you can always bring it to the IFC, because it is a very valid point. IFC is designed only for that. Again, your Ghosh committee report and Gilani committee report, you can take that. You can take that, because wherever you are going to report in IFC, there should be a concurrent reporting in the Ghosh committee report and the Gilani committee report also. And LFIR, wherever you, whether you have got various observation, the same branch what I have told you. In Kerala, an appraiser who is there for more than 28 years, he cautioned the bankers because the manager was helpless in controlling the appraiser. The appraiser was having more social contact and the customer contact than the manager who has been just appointed from North India. So the North Indian manager was complaining to us that, sir, I am not able to do any job here. This person is disturbing my job because he is sitting on my head and deciding on even a car loan. And he is the person who follow the matured gold loans. He is a person who follow for the recovery of the gold loan. He is a person who walks into the vault and takes the gold loan for release of gold loans. So all these things performance, we have given a very long report in the IFC as well as in the LFAR, stating that, and mind you, after 2 years, we found that there was a fraud of more than around 17 kgs of gold in that particular. So our observations, whatever we do, has got a weightage. Maybe not at this time. After some time, it may have a weightage. That point of time, everybody will do the postmortem. What is a statutory auditor's comment? What is this thing? I have received a call after 2 years from the central office of the bank, stating that you have commented in this LFAR like this. What made you to comment that? And it was actually a complaining call. They said that you should have given a special letter to us. I said that the LFAR itself we have not acted for 2 years. What are you going to do with my special letter? And 28 years you are sleeping over him. And you are giving all the roots for him to grow. And now you are saying that I did not give a special letter. It has got hushed up by itself. That criminal case and everything is going.
Yeah, but normally do the statutory auditors, central statutory auditors have a look at the IFC reports, sir? IFC
reports are very
consider.
serious. IFC reports are very serious. IFC reports will be consolidated at the central office level by the central auditors. And this, where I appeal to all auditors that your appraiser is a big issue. And you have to have a parallel appraising system of purity analyzer. Purity analyzer is available. There is a mechanical device which is available, which is you can buy it for 2 lakhs or something like that. So branches which are predominantly doing gold loan should be advised to have a purity analyzer also. So there should be a concurrent check of the purity other than the physical appraisal by the appraiser. That can be a very good point in the LFAR also.
Yeah. There is a question in the chat box, sir.
Yeah.
Yeah, the branch dealing in investments is deducting TDS on interest accrued portion when it sells that investment, but they are not remitting to income tax department. What is this?
Can you just repeat the question? I am not able to see the question.
Sir, shall I read it for
Q&A,
you?
yeah?
Yeah, it's in
chat
the
box.
chat, sir.
The chat box.
I have opened the chat box.
So I can read it for you again, sir.
Eh?
The branch dealing in investments.
Branch dealing in investments is detecting. What investments the branch is dealing is the first question. Usually investments are dealt with at the head office level.
Okay.
So the branches will be only custodians of the investment. If you take the LFAR also, the investment at the branch, if at all it is share investment or your mark-to-market investment, all these things will be dealt with at the head office only. Sometimes the physical document will be held at the branch, which you will be physically verifying and certifying in the LFAR. And the TDS portion is again, supposing if there is a bond which is issued by some companies locally, and if there is a pre-interest coupon which is going to be presented. So whether this is TDS, reduction of TDS on interest paid means it is not actually investment. If it is investment, you will only receive interest now.
Correct.
When it sells that in, so TDS mean comes only when you are paying something interest. So here your investment means you will be receiving interest. So can you just clarify whether it is a call money shares? Yes, it is carried by central auditors. See, that is why I told you there are certain branches where the custody of the investments locally. If you take the case of Bombay, or if you take the nowadays by and large because of the computerization, everything is dealt in by the Treasury Department, Investment and Treasury Department of the head office. But there are cases, we have gone to Ooty, where the Hindustan Photo Films had issued certain debentures, and the debenture warrants, etc., was there held at the branch of the Ooty branch. And every 3 months, you have to present that interest warrant and get the interest. In those cases, You are only receiving interest. You are not paying interest. So TDS deduction is the responsibility of the payer, not you. You are only receiving interest. So what is TDS on interest accrued portion when it sell that investment? So selling of the investment again is not the branch portfolio. Branch cannot sell investment at all. Branch can only hold as a custodian. So if at all the branch is holding, practically at this age of 2024, there cannot be any investment in the branch level. But if they hold it, they are holding only as an agent of your central office treasury department. And you have to only physically verify that. I have come across this central audit. Okay. So far, I have not received reply, including RB. Okay. You are central auditor. Okay. Now, in the case of central audit, the investment portfolio will be verified by a a particular chartered accountant who will be doing the investment audit. Now, deduction of TDS on interest accrued portion when it sell the investment. That is again, investment selling part is coming is only capital gains. It is not the interest accrued on accrued portion when it sell that investment. Okay, TDS on interest accrued portion. See, actually, interest accrued portion. Actually, sometimes you may be selling the interest, or you will be selling the investment X interest. So, if you are going to sell the investments come interest, then the interest is also accrued to the buyer of the investment. It's not a branch subject, it is a central office subject. So, if I am going to sell an investment as come interest, then the interest right is also being transferred to the buyer. In that particular case, the buyer is the eligible person who is to receive the interest, and the TDS has to be deducted from him because he is the accrual of the interest is on the buyer when it is come interest. Now, when it is X interest means supposing that your interest is going to accrue on a quarterly basis. And if you are going to sell it X interest, that X interest portion is due to you. And again, the TDS has to be deducted by only the payee, not by the payer. So to that extent, the responsibility of the bank who is selling the investment and receipt of the interest accrued portion has to be divided into two. One is whether the investment is sold X interest or come interest. If it is come interest, it is not your money. The interest accrued is eligible and entitled to the buyer of the investment. In the case of X interest, yes, you are eligible for the interest portion, and the responsibility of TDS is on the person who is paying the interest. The company, the bond, whoever the company has issued a bond or whatever it is. So that is what is why we are not remitting to, but they are not remitting that is another. So you are asking question about the company who is not remitting the TDS to the credit of the bank, which means that it is 26S. It is not a bank audit issue. It is a tax issue. So TDS, whatever is deducted, has to be remitted. Otherwise, it is a criminal offense. Any person who has deducted TDS and not remitting that is a criminal offense. And if you have got proof that your bank has got proof that the TDS has already been deducted by the other person, and if it is not remitted to the government account, and if it is not finding a place in the 26, you can immediately raise a question to the department stating that you can claim that also. You can claim it to the department, and you can also caution the payer that the TDS, if it is not remitted, it is a criminal offense. There are provisions in the Income Tax Act which is very, very cumbersome and which is very, very what you call strict. And if you go to the TDS officer of that particular jurisdictional place, they will be able to take care of it more than that. I have come across when I did central audit, but so far I have not received to include RBI. Sir, this is actually, I will tell you, I don't know, Mr. Rajagopal, it is a macro issue and it is an income tax issue. It is actually not a bank audit issue. But even then, for academic interest, we can deliberate on that. In my opinion, TDS, they treat as voucher gain or voucher loss. One can understand this clearly if he does not audit of investment branch. The voucher gain and voucher loss is not, TDS is not a gain or loss at all, in my opinion. TDS is only a liability which is being paid by another party, and it is only a means of collection of tax. It is not an end in itself. There are a lot of Supreme Court judgments which says that it is a means of collection of tax. So treating it as voucher gain or voucher loss is absolutely wrong in my opinion, because there is no gain or loss in TDS. So I don't know what is gain or loss in TDS. And it depends on who is receiving the interest. If the investment is sold, again coming back to the investment, if the investment is sold, then the eligible interest is on the other party. If it is investment is sold X interest, then you are eligible for the term in which you are selling the investment. So the TDS liability is on the other party. If they are remitting the TDS and not paying to the government in your credit, then it is a matter of procedural violation of the Income Tax Act by the other party, which you can even take it criminally before the jurisdictional income tax officer or the TDS officer. And treating it as loss or gain does not arise at all, because TDS is not loss, neither loss nor gain. Now Balaji has come out with a question stating that an enterprise having CCOD limit of 5 crore, its outstanding is 4.9 crore. Now 6 partner take gold loan of 2.1 crore and transferring it to the business CCOD account and using 1.8 to pay off the LC, pay for the LC. Okay. So you mean to say that one loan is taken for swapping the other loan. So what is more important is that an enterprise having CC, that is, two questions have come. Same question. Now 6 partner 2.0 transferring the business. Can they do this? Okay. Second question. Third question is Balaji. An enterprise having CCO limit of 5 crores, its outstanding was 4.9 crore. Now 6 partners take gold loan of 2.0 same each branch and transferring it to the business CCOD account using to pay the LC, pay for the LC. So now there are 2-3 questions which are to be answered in this. One is that whether a new loan can be taken to swap your old loan or not. Very clearly, Reserve Bank of India stated that you cannot do a fresh loan for the purpose of swapping your old loan. So that is very important. So the question is that whether this CCOD account is an NPA or not. If it is not an NPA, you have got all the liberty to take a fresh gold loan and swap your CCOD, provided the CCOD account is a standard asset.
That
It is
instead,
classified. Tell me. Balaji?
Diamond,
Yes, madam.
yeah. Okay, he's muted. Yeah.
Balaji?
No, sir. It was not Mr. Balaji. It was somebody else.
Okay. Now,
Yeah.
the answer to the question to Balaji is that in respect of the CCOD limit, first of all, we have to see whether the CCOD limit is a performing asset or a non-performing asset. If it is a performing asset, the partners have got all freedom to take a gold loan and close the CCOD. No questions asked. Because only for prudential loans comes only when there is a out of order issue. So out of order comes only when there is a incipient weakness of more than 90 days. And there are strictures as to how to classify an account as out of order. So in this particular case, if it is a performing asset, you can do anything. No questions asked. You can do that. Even for the payment of LC, the proceeds of the gold loan can be used. And there is no questions asked. If the CC account is going to be an NPA and the partners are going to take personal loans and swap this particular loan, then you have to see the liability in 2 angles. One is that a partnership firm loan is swapped by the individuals. So in legal terms, there are 2 entities. One is the firm as well as the second is the partners. So the partners in their individual capacity are pledging the gold loan and they are going to swap the non-performing asset. So here in that particular case, you can take a rational call that if at all the account is a non-performing asset, if it is closed before 31st March, since it is not directly closed by a fresh loan sanctioned to the partnership firm, you can very well upgrade this account, the CC account of the company or the firm, because the loans are given individually to the partners. Now, third thing you have to see is that the LC. there are two things which has to be seen in the case of LC. One is that LC devolved. Whether it is LC devolved and debited, and it is on the top of the CC account. Then you have to club the LC devolved before 31st March and the balance of the CC account and see whether this is totally to be aggregated and see whether the limit is suffice for the purpose of classification of it for the purpose of NPA or not. But the Reserve Bank circular says that if you look at 4.2, paragraph number 4.2 of the Master Circular, there are clear answer to this. It says that in the case of LC default, it should be taken as a regular loan of the borrower. And wherever the borrower has got other loans, that is to be clubbed with the other loan. And if at all the bank is going to park it in a different account, it should be clubbed together. And again, now the question is that if it is classified as an NPA and the partners individually, 6 partners individually are going to take pledge their own personal gold and going to take a personal loan, individual loan, and going to swap it with the firm liability, then you cannot question that because there are 2 entities involved. If the partners are going to pledge the gold as a firm gold loan, then it is a loan sanctioned for swapping another loan for the firm. So that is to be treated very pragmatically. And in my opinion, if the partners individually take loans, you have to see whether the account by itself, the CC account, is performing asset or non-performing. If it is a performing asset, no questions asked. You are very well, you are at liberty to. If it is a non-performing asset also, since the loan is given to a firm and 6 partners are going to do it on an individual basis, you can swap this particular gold loan against the firm loan because there are 2 entities in it. Third case is that there is an LC. LC has to be clubbed with the original loan, and even in that particular case, if the partners are, there are cases where the partners can sell the gold also. They can sell it outside. So instead of selling that, they are going to pledge it in the same bank. So it is not to be treated as a loan repayment out of a fresh facility sanction. That has to be seen from the angle of the firm by itself. So loan facility, if it is sanctioned out of the fresh sanctions or fresh limits or fresh loans of for the same borrower, then you cannot do that. If it is of 6 individual partners, you can do it. Yes. I will give my email ID clarification. I will send it all detail to get clarification from. Okay. It is applicable when the income from securities chapter. The bank are even after the topic. See, that are all. See, TDS matters, of course. If you look at the TDS portfolio of the banks, by and large, no bank in the core system is settled in respect of the calculation of TDS as well as remittance of TDS. They are taking bulk TDS and bulk payment is being made. Individually, they are not able to tally the TDS in account wise. And always, I tell you, if you go to the bank saying that my 26 AS does not reflect the TDS, immediately they will correct it and give you. But somebody else 26 AS will be gone. So that is always there. So if you complain, immediately you will get the credit. But it may be at the cost of somebody else. So they may be amending the 26 AS time and again. And majority of the banks are outsourcing the TDS functions. Your 26Q filing, everything is outsourced, which means that the outsourced person is at liberty to do anything. So he may do anything. And we have seen that if you take the global picture of the TDS reconciliation and all, it's all, we cannot say it in the open forum.
Okay.
Anything else? Anything in the chat box?
No, sir. Only this
Q&A
request.
3, Q&A, okay.
Sorry, sir.
Q&A only 3 is there.
Yes.
Yeah. I will give you my email ID.
Yeah. Any further questions, members? No. Yeah. I don't think. Anything in particular, if anyone wants sir to talk about or clarify, I think we can take it up. I don't think that there are any further questions, sir.
Okay.
So, anyone wants anything on which you need sir to throw light on? No.
Okay, madam.
Okay. So, what shall we do, sir? Shall we close this?
You have to decide, madam. You are the boss.
Yeah, I think. I think somebody has already thanked for this session. So I think
Exactly.
that, yeah, I think that you have covered quite a bit, sir. Even though at the beginning we thought we will not be able to cover so much, you have covered quite a bit. And this gold loan discussion has actually been really very insightful. Some things I did not think of, but when I saw the advertisement, I thought it's too close to the year end for them to actually issue such with
Mhm.
different branches across South they have done.
Uh,
And the value of the gold was pretty high in some of
right.
the loan accounts.
You find those type of advertisements by the NBFCs also.
Yes.
Manappuram, Muthoot, and all these people, no, their main income is that
Yes.
because the rate of gold also has high, no.
Exponentially it is increased, but you
So
don't
what
expect it of
they will
banks.
they will be getting, everybody will be in the win-win situation because the borrower
Yes.
also will get some money.
Yes, actually, yes.
Otherwise, he is going to sell it also.
Yes, he will.
Supposing think of a situation that you have pledged 8 grams of gold. Your loan to value was 4,000. You would have got 32,000 rupees
Yes.
as your loan. But what is the value as on the date of your pledging? It may be 5,000 rupees. That means 40,000 rupees. Today, what is the value? It is 6,000 rupees. You are getting around 48,000 rupees. So if the bankers are going to sell it, they may fetch around 46,000 rupees. So your 30,000 rupees loan, if at all you are not going to remit anything, it might have reached around 36,000 rupees or so. You will get another 6,000 rupees also.
Yes.
So you will be happy. The banker will also be happy because he is recovering the entire loan plus 6,000. And if at all he is going to charge anything extra, nobody is bothered because you are getting some money.
Sir, but this is not a part of the audit. But what you hear generally is that it is the employees of the branch who normally, actually participate in the auction and take the jewels. We hear that, and in one of my own
Earlier all it was there because nowadays it comes in bulk. You will not be able to, you don't have the capital to do that. Because now if you go to Manappuram, the auction list itself is very huge. They will be doing it in bunches of 4 kg, 5 kg, 6 kg like that. So
Okay.
minimum you should have that solvency to get into the auction hall itself. Kota branches, you take the case of cooperative banks and cooperative places where there is only very limited amount of gold to be auctioned. Always cartels and everything, goldsmiths or gold jewelers, small retail jewelers themselves form a cartel and come. And
Okay.
the staff also, that are old days. Now everything is centralized. So in the case of banks also, they are centralizing the selling of the gold because, as you rightly said, there are a lot of malpractices just happening earlier. So in order to curb all these things, now it is all centralized. Now your ticket size itself is more than 3 crores, 4 crores like that. So if you want to participate, you have to give the solvency. All these things are very important. Now big jewelers are participating. I have about 2-3 jewelers who are participating regularly in your Manappuram and Muthoot gold loans. So they take around 16 kg, 17 kg they take at a time. And mind you, there are very good ornaments also.
Yes.
Brand new ornaments will also be there.
Okay. Yeah. Okay. Members, any further questions? So I think since there are no further questions, we will thank you very much, sir, for actually accepting our invitation and sparing your time. And whomsoever has attended this session has actually gained a lot of knowledge, including me. But this time I don't have I've not got the bank audit assignment. But anyways, it is something which we can. So thank you very much, sir, for actually taking the time to join us today.
Thank you.
And
Thank you
on
very
this-
much. It's my
Yeah.
pleasure to join all the chartered accountants and SIRC from time immemorial. I am the partner of PC James, who was the chairman of SIRC. Chartered
SIRC,
Council
yes.
member. So our association with the institute and the SIRC is very long lasting. Let it continue, and thank you very much for the opportunity given.
Yes, sir. Thank you, sir. Thank you.
So we will have to thank our Sadishan also, who only have arranged this particular thing. So I thank
Yes.
Sadishan.
Yes.
Sadishan sir earlier has to ask me to be a part of this particular session. And
Okay.
again,
Yeah.
okay, madam. Thank you. Nice
Yes,
meeting.
sir. Thank you, sir. Thank you. Thank you.